We are back. We're still on the performance of the insurance industry 2021. A year that is said to be a coronavirus pandemic year. All right, Davis, we're getting ready to chart the way forward in 2021. But then here comes IFRS 17. Somebody would have asked you, and this is a question that we got on layman terms. What is this IFRS 17?
Pardon, Simba, I think I lost you on the last question, sorry.
Yes. In layman terms, Davis, should somebody want to understand what this IFRS 17 is, what is it?
Okay, I think if I got that question right, is I think I'm struggling to get that question. Maybe if I can listen again.
Yes, Davis, I am can you get me now?
Yeah, I can get you now.
Fantastic. Yeah. So in layman terms, for anybody who wants to understand what this IFRS 17 is, how would you describe it?
I think I'm one of the most optimistic people, I think, in this world.
Yes.
When it comes to imagining that things will always be good. I think I saw like Washington saying in one of his radical proposals that insurance companies, some of them should be shut. I strongly feel there is something that we can always do better than the last year, better than yesterday, better than today. So when we are looking at the year to come, things to come, and even out of the experiences that we've had for the last 1 year,
yes,
I believe we still have an opportunity as an insurance industry to be able to even do better and come up with things that can be able to improve on the industry's well-being in particular. Simba, if I could say that.
Pretty much. All right, Gabriel, for anybody who wants to understand why this IFRS 17 is much talked about, in layman terms, how would you explain it, Gabriel?
Well, Simba, I'll give it a shot. We always take some time before we fully see the implementation of this. But so if you look at any, or basically the accounts of any insurance company,
yes,
you'll always see a liability in the balance sheet, which is the claims they're expecting, or rather the potential claims for that year that have to be accounted for, because you've booked premiums in your balance sheet or in your financials. You also have to book the potential claims that happen. Now, there's always a timing problem with these claims because remember, insurance contracts do not start on January 1st and end in December. They start at any given point in time in the year.
Yes.
So then how do I book? So then there's always a concern about how do you properly account for this when your year end is December and you have even a product that started on 30th December. You have another one that started on 2nd January. It's almost lapsing. So this, I believe we can go into details once it's out, but IFRS 17 is going to ensure that those potential claims are actually properly accounted for, so that these companies are not understating the potential claims. Because you see, one way of increasing your capital adequacy as you're talking is to understate potential claims.
Yes.
So that no one can actually see how much you might be paying out at some point in time, or what your potential exposure is. Because yes, your potential exposure is just potential. It has not come into fruition. But remember, if it does, it needs to have been accounted for properly. So that is what IFRS 17 will sort of come to show, so that company A and company B both account for their potential claims in the same way.
Pretty much. All right, Washington, do you feel therefore that, and since you're a big critic of exactly how these companies have been managing their capital adequacy and needs within the economy, do you think that the stress right now should be sort of pushing these companies to conform to IFRS 17? And if not, what do we expect to see, Washington? Yes, Washington, unmute your mic.
Yeah, that comes to the same thing I talked about.
Yes.
That companies, or rather investors, are coming into the Kenyan industry.
Yes.
In the Kenyan industry to invest in sound insurance companies. Sound.
Yes.
They're not investing in every company in this country. You know, they're not investing in these companies or paying claims. They're not investing in companies that cannot even, right now speak, they can't even pay their workers. Not even companies that cannot even pay commissions. Yes. You wonder, why do you give a business and then you don't get commissions as a broker insurance agent? Doesn't make any sense, you know. Now, and actually that's the main purpose of actually having or rather having companies adequately capitalized, because at the end of the day, it's all about taking care of our clients. It's about taking care of claims, so to speak, because that's what insurance companies are all about. Now, when we have IRA keeps on, for example, they talked about 2017. All companies are supposed to be adequately capitalized in 2017. Yes. They pushed the same now to around 2022. All companies should be adequately capitalized. The good thing about that is that you're going to see forced mergers in those companies that cannot be able to get adequate capital. Now, you're also going to see investors coming in and investing in the insurance space. If you've been following my writings, I've been talking about one major insurance company in this country that investors bought in. But right now, as we speak, the company is actually on the way down. So could it also be a matter of management? These companies, are they being properly managed? Is the regulator actually, because the regulator, we see the regulator doing the work of overseeing management of insurance companies, overseeing the personnel that are going to run these companies so they are properly qualified? Are we seeing companies actually being properly managed in this country? Because when you get a company going to the extent of actually coming down or going down because they're not paying their claims, who actually is to blame for all this? Because you need to get down to the basics. Who's to blame for all is happening in the insurance sector in Kenya? Because I tend to feel that we are not being adequately regulated. We are not being, the insurance industry in Kenya is not being overseen properly so that we can take care of our clients. Let me tell you, Simba, there's nothing as hurting as, for example, you get an accident with your car, with your hard-earned money, and the insurance company cannot come through for you when you get an accident. There's nothing as hurting as that, because the whole purpose of buying insurance is to make you secure, is to make you feel confident that your future is taken care of. But so the insurance company in this country is the insurance industry is very, very important and crucial for this sector. Yes. And we cannot, much as Anthony keeps on saying that I'm being radical, much as Davis has also gotten into the fray and gotten into this fight, you know, we need to shut down these companies, you know?
Yes.
No, it's not about being radical.
Yes, Washington, let me bring in Anthony and Adelaide to weigh in on that as well. Anthony, well, Washington wants you to respond on that, but I will phrase it like this, and you also try to respond to him quickly at that, because we have a couple of questions from the audience that I'd like to put to you, ladies and gentlemen, on our panel this morning. Now, here's the thing, though. Well, do you feel that there's this sentiment within the industry, well, to move towards conforming to the demands of IFRS 17? And if not, then what sort of response do we expect to see from the industry, Anthony?
Sorry, I think I've missed that. If you could kindly take that question again.
Yes, Anthony, can you confirm you can get me now?
Yes, I can.
Fantastic, good. So, question is there a sentiment within the industry that yes, IFRS 17 is coming? And if not, what sort of response do we expect to see in the industry, Anthony?
I honestly am not getting that question very clearly. I don't know whether it's a problem from my end.
Maybe I could take over as he...
Yes, Adelaide, can you take that question?
Yeah, I think from reporting perspective, from an accounting perspective, it's not about a sentiment, it's about people wishing to there. And as Gabriel has stated very clearly, these regulations are to be complied with. Most insurance companies, their actuaries are already aligning their accounting mechanism to look into that, except from the calculating the present values of future liabilities to be paid out. We also have to look at insurance contracts. We have to look at interest rates. We have to factor in all these different elements that were siloed within the accounting process and put it into one present value perspective.
Yes.
So it's not a matter of it being a sentiment or whether the industry or the market is going to adhere. And Gabriel, you can correct me if I'm wrong. It's every single company just aligning their current accounting processes to ensure that adherence by the year 2022, 2023, I think there's an extension now by 1 year that there's compliance and quite frankly, every insurance companies, whether your sentiments are for IFRS 17 or not, the compliance is going to be necessary.
Pretty much. Anthony, can you confirm you can get me, because I want to get your sentiments before we cross over to some questions that we have from the audience.
Maybe Simba, I think two things before you move.
It's fine, just go on.
There are two things probably, Simba, we are looking at. One is just the way as Adelaide was saying, is just trying to add on is we need two things to become out very clear, especially in relation to this IFRS 17. One is we need liabilities properly marked to market. I think what we have been experiencing before is not. I think Anthony knows I think the opposite of marking to market. You'll correct me if I'm wrong, but then also important, the true reflection of profits.
Yes.
Simba, we need to see that that has always been a question in the insurance industry. How sure are we that even the profits that are declared are correct? So even as we go around, probably something to ponder on here.
Pretty much. Anthony, can you clear this conversation on that?
I get the gist of the question now, I think, from the two panelists. Yes. My last part, first of all, would be that we need to be very, very careful with the speed that we are going at.
Yes.
No companies, not only in Kenya but globally, basically have been affected by the pandemic, and obviously that has affected anything. So I would call for caution, as much as, of course, we want to ensure that everything is done right. I would call for caution, and it means, I'm not so sure, but I think we have an extension of 1 more year, which I think is what really will also that companies can basically be able to bring up their books properly into account. But having said that, there is certainly the issue of our country. For instance, I would say, give an example. We all under one act,
yes.
For instance, between insurance companies and and brokers, for instance, and even agents. Now, if you look at the way the registration is being done, brokers are the only ones who are required to do an annual renewal, but underwriters are not. And I think that is a miss, because then the regulator loses the opportunity basically then to streamline the insurance companies. Because when you have a perpetual license, for instance, the insurance companies now currently enjoy perpetual license until it's revoked. Then as a regulator, then you don't have that opportunity basically to put strict requirements, because then what it means is that an underwriter knows until my license is withdrawn, then I'm in business. But initially, before, they used to have their licenses withheld until they meet some certain conditions. So I think there is a whole issue of the management and regulation of our industry that I perhaps at this point in time may not necessarily be able to be on this platform. But I would say I look at a situation whereby the regulator needs to have a uniform way he is managing this issue. I like what I think Washington talked about, the issue of who are managing the insurance companies in terms of, in terms of qualifications and who are the directors and the management. Again, those are some of the things that we must be able to really do that. And the day we'll be able to have all the trade lobby institutions, ACI, AIBK, agents, under the law, so that we stop being just voluntary, then that will be the day that will be the day that we're going to change our industry. But for now, we basically find ourselves very having a very difficult time.
Yes.
To regulate some of our members because we don't have the skills. Yeah.
Pretty much. All right, let's clear. And Adelaide, I want you to take, if you can, 45 seconds, Adelaide, to answer this question from the first question that we have from our audience this morning. 45 seconds. We have 3 minutes. I'll spread these questions across all our panelists this morning. Adelaide, first one, 2 tips to consider when choosing the right insurance company.
One, what is their track record? Who forwarded this particular insurance company to you? What kind of success rates, especially on claim settlement and speed? That is very critical, because what challenges we have with insurance company is cost, trust, funding, and efficiency. So if these insurance companies are holding these 4 key pillars of insurance uptake, are they priced well? Do you have do they explain their products very clearly? Do you understand them? Can you trust that they'll pay your policy on time? And lastly, what are the processes? Are there digital channels that you can be able to each address their contact center efficiently? So look for those 4 key pillars to be able to onboard into insurance companies.
Pretty much. All right, let's cross over to Davis. This is your question for you this morning. Is insurance best fit for the employed only? Davis, can you unmute your mic so that we do your 45 seconds, sir? All right.
Yeah, sorry. It's a very good question. I'm saying, Simba, insurance is not only meant for the employed people. Insurance is now meant for everyone. There is a product for the people who are employed. There is a product for the people who are not employed. I think all you need for you to be able to have a product that adequately addresses your need, whether you are employed or not, is probably to find out a proper financial advisor or a broker like Davis here. Sorry for campaigning for myself. But then who can be able to advise you properly on the products that fit your particular need. Yeah. Far and wide, we have products for everyone here.
Pretty much. All right, let me cross over to Anthony this morning. Anthony, question is, why do I need a broker and what can I insure? 45 seconds begin, sir.
You need one because they understand the whole terrain of insurance.
Yes.
It's a very deep, it's a whole rigoristic platform of insurance, and therefore you need somebody who understands the whole the picture of the whole market, so that he can be able to interpret for you what it is. The other thing is that all insurance companies don't have the same products the same way. So you need this one person who will be able to look and scan the market and say, for this company, this is what is covered, this is not, this is what covered, this is not what is covered. So I think a broker therefore becomes very critical. Then of course it releases you time, because you can be able to read what you are doing, and the broker would actually be able to follow up for you, especially when it comes to the issues of claim. That is where the broker comes. But more importantly, I would say the whole issue of advice, and even your first question is why you need an underwriter. The broker is able and well-versed actually to be able to know which is the best underwriter for you. You may not have that professional understanding of that. The broker comes in that area.
Pretty much. All right, Washington, let's do your 45 seconds. What happens if one doesn't use the insurance policy? Is it refundable? I'm just going to ask the way the questions are coming in, Washington.
What if one doesn't do what insurance policy?
What if one doesn't utilize their policy? Can I go get it back?
Well, I think what I understand is what if one doesn't utilize or rather claim from his insurance cover, right?
Yes.
Well, even in the Kenyan, the insurance industry is crafted in this country, or the insurance products are crafted, is that if you don't utilize your cover, or if you don't get a claim, so to speak, and that is for general insurance, then you're done. Your premiums go, and you have to, because they usually annual premiums. Then the following year, you have to do the same again. You have to insure again. Well, of course, that is not the same as a life. But now, this is where now, Simba, if you, I don't know if you read an article that I wrote about 2 weeks ago. I talked about peer-to-peer insurance. Peer-to-peer insurance fills up some gaps of whereby if you don't utilize your cover, then the premiums that you paid can be gotten back. You can, or rather, you can reinvest the same premiums for the same cover. You know, because for peer-to-peer insurance, it's not about profit; it's about coverage. So in this country, and I think we need to get a little bit more innovative in our insurance products. We need to get a little bit more innovative in how insurance is done in this country.
Pretty much. All right, Gabriel, this is my question to you. It's not essentially from the audience. And since, well, it's not part and part insurance. Gabriel, as we clear this conversation for 45 seconds this morning, what do you think can actually get us to double-digit penetration insurance numbers within the economy?
Double digit. That's a stretch.
I like the way everybody's laughing this morning.
Yeah, double digit is a stretch, but I think I'll just go with the term, innovation.
Yes.
And then again, different pricing models. We need to, even give someone covers for even 200,000. Smaller covers for health, partial covers. We just need to come up with a product for the common mwananchi, because like we said, most of the products developed are currently for self-employed people. And if you're out of a job, you actually cannot maintain the kind of products you already have. So I think innovation around the kind of products we have would be useful in increasing that penetration.
Pretty much. This morning, I'd like to say thank you very much to Adelaide Odhiambo, CEO, Blue Wave, Washington Daguerre, Chairman, Bima Intermediaries Association of Kenya. We have Davis Ongiro, General Manager, Octagon Insurance Brokers Limited. We were also joined by Anthony Mwangi, Vice Chair, Association of Insurance Brokers of Kenya, and Gabriela Mwendwa, Investment Associate, Horizon Africa Capital. Take them to the time they came back into the studio at Metropole TVKE across all your social media platforms. This has been a Business AM, will continue to be for us here. It is a good morning, and thank you very much for watching.